Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, a few things to unpack before we start the week looking at where all the best trades are. Now, Friday, we had the non-farm payrolls numbers, and if we just have a look at the charts, you might have seen like a little sharp sell-off in the dollar, right? Dollar Swiss dived, dollar yen dived, and euro jumped up, sterling, etc. Right, so the dollar a little bit of a nosedive, but as I sort of presented to you in the update for Friday, the market was already anticipating weak numbers. So what we had was a quick, the old 1-2 shuffle, right, which is basically down and then straight back up, and that sort of happened across the board, whether you were trading sterling, euro, dollar Swiss, or dollar yen, right, and that's where we are now. The Now, just on top of that, right? We had some Japanese elections over the weekend, right? And Ishiba resigned. They got smashed in the polls. And what we have seen, if I just sort of blow up dollar yen, is a pretty large gap, right? A bit of a gap in the market. There were some strong GDP numbers out of Japan, but it's a little bit of a dog's breakfast as far as looking at the charts. Right, and so those US numbers, the US payroll numbers are out on the table. Right, let me just come back to that. So you're looking at the now, how bad were they? They weren't terrible, right? To be honest, the non-farm payrolls 22. Okay, the range was 0 to 144. 75 was the forecast. That's why it sort of dived. Right, the unemployment rate was as forecast, but on the sort of on the high end of the expectation range. So this is what we got. This is the main major mover, right? And it's not terrible by epic proportions. And that's why we only saw a little bit of a knee-jerk reaction there. Now, this is where things heat up because this week, if I just come over to trading economics, it's a bit easier to trail or track the weekly data. Now, we do have, out of all the balance of trade numbers, the Chinese ones are the ones that are the biggest, right? The biggest exporting country in the world, basically. So we'll see how that goes. But if you scroll down, there's not a lot until, I guess, Wednesday's inflation numbers. You got US PPI numbers there on Wednesday as well. Sort of Wednesday onwards, it really kicks into gear. But come Thursday, this is our main trade day, right? And not just because of the ECB. Now, there's no change of rates expected from the ECB. But more importantly, for me, it's the US inflation numbers, right? This will tell us a bit more about what is actually really happening with the US economy. Now, we're not getting the flow on effect in the major currency pairs or on a lot of instruments for that matter. And that's because the central banks are sort of frozen, right? If they're not making decisions around buying or selling, or I mean, I shouldn't say buying or selling, I should say raising rates or cutting rates or talking about doing those things, then you get that sort of stagnated sort of moves, right? If we look at the daily charts, right, you look at this over June, July, August, coming into September, we've just been drifting sideways on a lot of instruments. So, and if you're getting a little bit frustrated with your trading, well, that's because this is what's happening. We need the central banks to be doing something. And that creates the moves where we get nice, clean, trending markets, right? And so that's why things are or may appear a little bit tricky. But one thing you don't want to be doing is trying to jump into trades like this and think that's the answer. It's not. They can be quite chaotic. So let's plan the week, right? Now, if you're already having a look around, still, I come in and do my analysis each day, right? 5 or 10 minutes, have a look around. I'm then looking at the major data. What day is the key data for me? And then I can sort of start planning trading opportunities around that, right? You got the core numbers. Well, in actual fact, it's this one down here, the year on year, which is the most important. I'll be covering that as we get closer to it. And then as you come into Friday, we've got some UK numbers, right? We've got to wait all week. Manufacturing production, industrial production, GDP numbers. So Friday really belongs to sterling, the UK. Thursday, obviously, euro is going to be in the firing line because we've got the ECB, that's the euro side, and then we've got the dollar side of things as well. So there are opportunities as we lead up to this, but understand today we've had a bit of a chaotic situation here with the yen. Now, the yen, the beast, it hasn't like been delivering anyway, right? So I'd be just sort of taking that off the radar for the moment, and I've had it off the radar probably for about a month. I keep looking at it, but nothing to get me really sort of into it. Now, we still have like the remnants of a weaker dollar here, right? We had the non-farm payrolls. Yeah, the dollar did bounce back a little bit, but still you can see that the dollar wants to go down. So what are we looking for? Well, if that's the case, and this is going to be more obvious as we get closer to Thursday's CPI numbers, what we need here out of these two puppies in particular are weaker numbers. Right? Weaker numbers gives us a weak picture. The market is already factored in Federal Reserve cuts, right? They may start to factor in more cuts before the end of the year, right? So that's going to be the most important thing. We want weaker numbers to get this rolling, or you know what, on another extreme, really strong numbers, and then at least we start to get some discombobulation. The market has factored in a rate cut in September by the Fed, right? Weaker numbers confirms it, maybe puts pressure on them to do it more before the end of the year. If we got stronger numbers, and I'll cover this coming into sort of Thursday, if we get stronger numbers, well, the Fed is still going to probably cut rates. It depends on the numbers, but that may stop the end of the year, right? So what we're trading really is the next move, right? So, and like the week after this, I think we've got the Fed, and they will make the decision, right? So don't give up hope just yet, right? The markets have been a little bit frustrating, if anything. If you're looking at the overall markets and looking at the data, trying to be objective, right? The US Treasury yields are lower, which means lower US dollar. We haven't really seen that big push in the currencies yet. So I'm expecting the dollar to go down, equity markets to go up, and Euro, Sterling, Aussie, Kiwi to go up, and the dollar pairs, right? Dollar Swiss, dollar yen, dollar CAD, and everything else to go down, right? That's where the action is. You can see the damage there from that Japanese election and the PM quitting. A bit of a dog's breakfast, as I said. So what's the plan? Well, be patient, right? Be patient. Wait for the trading opportunities to pop up. Now, the live trade signals, these are quite indicative of trading conditions, right? And you know what? A lot of the major currency pairs, we do have signals here. I'm leaving dollar yen alone, but we're starting to get some really good traction here on most of the major pairs. We just need the market timing to be right to fit the picture. So that's all we need to do. Use the signals to sort of gauge around what pairs you should be trading. And then as we get closer to the key events, we can assess whether we trade those. We'll definitely be including the outcomes with those live signals. And that's where the easiest trading opportunities are going to be. All right. So bit of a slow start to the week, bit of chaos with regards Japan. Just keep an eye on the calendar. If I just get over here, what is it? The 7th and 8th, right? So coming in, just keep an eye on various bits and pieces. Industrial production numbers there out of the Eurozone, maybe worth a look, right? German numbers there. All right, guys, that's it from me. It's an exciting week with US CPI Thursday. Hopefully everything should calm down, especially with regards to the yen over the course of the next 24 hours. Right, we're looking for some uniformity with the dollar. The CPI numbers will give it to us, and then we can start sort of piecing together where that next trade is. Right, patience and discipline, the key to the start of this week. All right, guys, have a good one. All the best. Cheerio.